All right, guys, good morning. Good morning. Welcome aboard to the morning note. It is about 15 seconds away from 9 a.m. Eastern Standard Time on a Monday, officially the end of January 30th, 2023. What a quick month it has been. My goodness, it felt like it just came and went in terms of the month of January. So, 1 month down in the year of 2023, a pretty good year, a pretty good month for the stock market at least. But let's go ahead and talk about it. Let's talk about a couple things I'm watching. And we got a big week ahead of us, so let's kind of prepare ourselves. Let's go around the horn. Dow futures down about 156, Nasdaq down about 1.14%, S&P down 0.79%, Russell 2000 down about 1% at 1901. Crude oil is down 2%, 77.98. $2.53 for gasoline futures. That's down 2.24%. 10-year treasury yields 3.542%. The dollar is flat, yet the market is down, so that's interesting. 101.94. It was red overnight, but is now pushing a little higher. VIX is up 6.65%, gapped up to around 20. We're now at 1974 this morning. Gold futures are pretty much flat, 1945. Silver futures up 1% this morning, 23.86 an ounce. Copper's down 0.5%, $4.19. Euro dollar is up 15 pips, 108.84, 103.11 for the dollar yen, up 30 pips, down 22 pips for the pound dollar, 123.75. Bitcoin is down 0.41%, but doing better than the Nasdaq, 23,225. We're still waiting for that 25K level. 1582 for Ethereum, down 1.62% this morning. First thing I want to start off with is a tweet that I sent out the other day. I think it was on Friday. So let me go ahead and bring up on Twitter first. Hope everyone had a great weekend. While I wait for this to load. Crazy games yesterday. I knew the Eagles were going to win. Eagles kicked some ass. Brock Purdy got hurt, unfortunately. I had a parlay going with my buddy Nick in New York. I had George Kittle scoring a touchdown. He didn't. And also the Chiefs won. I had the Bengals winning, so it was an ugly game all around. Let's see if I can find this tweet I sent. I don't know why it's white this way. It really blinds you. Let's take a look here. I know I had the tweet here. We're going to go to media. Okay, we talked about the weekly settlement. We wanted to get to 40.36. We held, which is good. But this is what I wanted to look at. Here we go. All right, let's take a look at it. Here is the tweet I sent out 6:41 p.m. last week on the 25th of January. I said that 4,100 target on the S&P will give us the recapture of the December highs right before the last FOMC where we fell to 3,800. So again, keep that in mind. And the reason I'm talking about that is, again, that is the level that we were previous CPI, and then we had the Fed. So again, you have 1, 2, 3. Yes, we did have a wick breakout. But again, it seems to be this right here, about 4,100 seems to be that resistance on S&P 500 futures. So as of right now, what I'm looking for is a possible retest around 4,008. The good news is that we are bouncing currently. So again, we are holding a 100 moving average on the hourly of around 40.40. I have an alert at 40.19. If that does break, I'm looking to see if we can short back to either the retest of the Wednesday level, which was the same as the Monday level that we had, where we had that little push. So again, we're really looking for the zone around 39.80, but we need to break 40.20 to get there. If that does happen, I want to short some of the tech names out there, at least to catch some puts. We may not even get there today. You could see that we are down this morning, but we have earnings this week and we have the Fed. So let's go ahead and go over the earnings together on what's coming up. This is from our friends at Earning Whispers, someone that we follow very, very closely on Twitter. We have ExxonMobil on Tuesday, UPS, General Motors, Pfizer, Caterpillar, McDonald's, Spotify, and Marathon Oil, Phillips 66 on Tuesday morning. In terms of today, we had SoFi. They reported earnings. We'll go over that here in a second. We also have Whirlpool after the bell, NXP after the bell. Nothing that I'm really putting a lot of emphasis on. Tomorrow will be interesting because of AMD. I am an AMD shareholder. So again, AMD on Tuesday after the bell. We'll chart that here in a second. Waste Management, Altria, T-Mobile, Peloton. Humana all in the morning on Wednesday, Meta on Wednesday afternoon. That's pretty much the big one, Meta. And then Thursday is pretty much where it starts really cooking. We got Merck in the morning. I had a position Merck, but I went ahead and took that for profit with Investment Club last year. ConocoPhillips, so again, a pretty energy focused week of earnings. Amazon, Alphabet, and Apple are after the close on Thursday, with Qualcomm and Starbucks. Starbucks has been absolutely on fire lately as well, with CBOE and Cigna on Friday morning before the bell opens. Let's go ahead and take a look if we can get the SoFi numbers here from our friends at Stock Market News. Shout out to Evan. I do pay for the premium service for him, so I can get you, well, I want to support him as well. He gives us all the news that we need on Twitter. So again, big shout out to Evan. Reported earnings posting numbers of GAAP EPS of negative 5 cents, beating the expectation of negative 9 cents. 443 million, beating the expectations of $439.2 million. If you have been paying attention, and I've been retweeting it, the SoFi CEO and I think board member as well have been buying shares since last year, since the fourth quarter. So someone has been pretty bullish on SoFi. So let's go ahead and move this over. We'll take a look at SoFi together. Let's go and bring that up on the hourly. You could see a nice push now at $6.49, right about 55 cents from Friday's close. If we go to the open, the daily, you could see 646 is a nice breakout level. Would you target $7 here? I wouldn't, but again, it could get a nice break and possibly get to 7. I would skip this name just because of the volatility out there, and I expect the market to at least retest that trend line that we have. And again, if the high betas move higher, fine. But again, I wouldn't want to go long SoFi when I'm expecting at least a retest of 4019, which is that downward trend line. The one thing we're getting very close on S&P 500 futures, guys, is the golden cross, which is the red line and the yellow line. The yellow line being the 50-day moving average, the red line being the 200. Once that breaks, that should be a bullish signal. We have that on equal weight S&P. I talked about that on the top 10 stocks of 2023. The video will be posted rather shortly. And again, you can watch that for free on our YouTube channel, which you're on right now. Let's go ahead and take a look at some readings of possible overbought levels. We'll go to RSI here. Let's go to 2-year. You could see on the NASDAQ, we are getting close to oversold. The last time we got overbought, last time we got there was the August highs. So again, don't be surprised that this week we get a pullback due to the FOMC. Not even if they say anything negative. It's just the fact that we may be getting too too fast. We need a little bit of a breather. But again, if that golden cross does happen, which we don't have on the NASDAQ, I expect the NASDAQ to at least retest 11,709. So again, that's about 300 points. Possible opportunity for Qs. You know me, super bull. But again, we're starting to get a little ahead of ourselves. We're starting to hit some key resistance of around 296.87. If we expect to pop, it's above 300. And if it does pop above 300, I'm taking a look at the 308 level. That's a gap to fill back from September. But we need some good news to get us there. Earnings would get us there, possible a dovish FOMC. So again, I don't know what the Fed is going to say. I really don't know what earnings might be. But again, we had Microsoft's earnings come out. They fell after hours and then they soared. Then we also had Tesla earnings. They soared. So far, at least on the mega cap tech side, it's been okay. We haven't been tanking or anything. The market has been rather bullish so far in the month of January. But again, we need to get above 396 to get to that gap fill, the continuation for the gap fill of around 308.50. I say we reject this week. I think we get back to at least the 200 moving average on the daily, which is right around 292, if not right around 287.71 on Qs. That would probably be the target I'm looking for. Let's see if we get a pullback, maybe get us an opportunity to catch some puts right before the Fed, or even ahead of earnings that are coming up in Thursday. Just really depends on the price action we get. But I think we're in a little bit of a crossroads here. So again, you're almost at overbought conditions, at least on the daily. You're getting a reading on RSI just on QQQ of around 68.5, 70 being overbought. So again, you could see the resistance here right around 296.54. Again, a retest of the 200 MA is completely fine and natural for a bull market. How about a retest of the technical trend line? Resistance becomes support. If we can test that and bounce, that would give me a lot more confidence, and it would show a structural bull market rather than just a short squeeze of people getting out of shorts. Again, what we want is demand for stocks. We want our stocks to be actually wanted and in demand. And again, we don't want just one big pop. We don't want a Black Friday shopping deal where everyone wants to shop just on one day. We want consistent buyers who are turning bullish over time, which would give us capital appreciation on our stocks. Again, when it comes to trading, sure, I love the big spikes, no problem. But when it comes to investing, I want consistent growth. I want structural, technical patterns that show us that resistance breaks. With that resistance becoming new support, we get a nice retest, and then we continue higher on the new trend. That's what I'm looking for. So again, this week, this is where you want to take a look at some hedging. We talked about that on the newsletter this weekend. Don't buy insurance when you have to. Buy it when you can. So again, possibly some VIX calls or something like that. Some SPY puts, QQQ puts we just talked about. In terms of VIX, we are not oversold. If we go to the hourly, you could see a gap to fill. That I don't like. So that gap might be filled rather soon, which would make the market rather bullish. So kind of tough, but again, you see a downward trend on VIX. If you're buying insurance, it's rather cheap now ahead of a very big binary event of FOMC. We also have mega cap tech earnings on Thursday. This is probably the opportunity to start taking a look at some puts or some insurance in your portfolio for any kind of price swings. If you're just an investor in your 401k, none of this really matters. But again, if you're a trader, you're looking for an opportunity to get some insurance, possibly some puts. The 100 moving average is right around 401.72. I'm going to go ahead and place an alert there. If that does break, I'm taking a look at possibly the 395 puts on QQQ. That'll get us back to that same Wednesday retest level. Now, that would be a break of the trend line, obviously, but again, a nice check back to Monday, maybe an opportunity. If not, at best, we'll probably get to around 398. So again, you could always kind of mess with the numbers depending on the volume out there. Maybe the 397 puts would be more expensive, obviously, than the 395s, but 397 would get you right in between the 400 puts and the 395 puts if we do break 401.72. 401.72 would give us a little bit of a break of around $4 per. Again, depending on volume, I would actually look to be buying puts here on a pullback ahead of FOMC or through FOMC with the Fed. And that's really all I'm looking for this week. We had a great week last week. The idea is not to add more risk just because. Obviously, you want to be playing momentum, but at the end of the day, we want to give back all the hard work we have done this month either. Let's answer some questions. William says, good morning. Interactive says, good morning. Good morning, everybody. Hope everyone had a nice weekend. Hey, man, SPY calls levels. Let's go and take a look at SPY again. Again, I expect a pullback. For us to go ahead and want to go into SPY calls or, long here, anything. Really, the level you're looking for is right around 410 on the daily. That would be the breakout level. So when it comes to calls, I'm going to say 410. That gets us to right around 4,100. That's kind of the target I'm looking for calls. If we go long, I would want to break that first, not ahead of time, because I'm expecting us to pull back and check back to at least minimum 398.89, which is the most famous trend line in America or the world, the S&P 500 downward trend. So again, I expect that rejection to pull back a little bit. If we get to 410 and break, that's above the December highs. That'd be great. We have a gap to fill at 420. Now we can start looking at some possibilities for more upside room. But again, we need an FOMC that's going to be a little more accommodating to us rather than fighting us. And we don't want to fight the Fed either. So again, I say that we're going to pull back to around 400 per share on SPY. That's about a $5 move from closing. We're at 402.78. Again, watch that very carefully. Do not be surprised we pull back, guys, because we've had such an incredible run up just this past month. Doesn't mean the rest of the year won't be bullish, but again, short-term price moves ahead of the Fed. I expect some more volatility, of course. Thoughts on Palantir for the next 3 years? I own Palantir. Palantir has not been nice to me lately, obviously, the last year, but either way, I love the stock. And again, with AI and cybersecurity, I think Palantir is like the Google of its time, in my opinion. The only problem is the board does offer a lot of share awards that dilutes shares. I have an alert above $9.38. If we can break out of that, I would definitely be considering adding some more here. Again, low, we're at the lows, obviously, but again, it's not the time to buy yet on Palantir. We want to buy something, obviously, that's going to have at least some demand in the future. It's going to be very tough to keep buying shares when you see it continue dwindling down. It's very demoralizing for an investor unless you're a dollar cost average investor. then again, none of this really matters. But when it comes to a 3-year period on Palantir, the expectation is if we get lower rates, lower inflation, lower dollar, then you can talk about getting to around $14, maybe $12 a share. I wouldn't expect too much until financial conditions get extremely easy where we actually have rate cuts. That's when things like a Palantir and Upstart and these names are going to actually push higher, is when we actually have financial conditions that actually would be a benefit to these high beta names. Remember, you're looking for growth when there's low interest rates out there, because if you're a saver, you want to put capital to work. But when you're trading a 2-year treasury yield at 4%, it doesn't make Palantir and all its volatility exactly appealing to the average investor or a hedge fund manager or a mutual fund manager. What we need from Palantir is to actually get some momentum. And momentum would come from A, either very, very strong earnings, or B, easing financial conditions from the Federal Reserve. Hate to say it, but most of these companies only benefited and only grew because of the cheap money policies we had during COVID. With recently announced Ford price cuts, would you play Rivian puts? I like puts on all tech companies. I expect us to pull back. I don't know in terms of Rivian if I would want to touch it. I thought we had some volatility with Lucid, if you guys remember. I think Lucid might be worth a put to around $10. The volatility might be a little wild, but yes, I read about that Ford price cut because of Tesla. The good news is that prices are coming down. That's nice. The bad news is that's going to hurt margins for Ford and Tesla. So in terms of Rivian, is there any edge here to short? I don't see any. I think Lucid would be a better play, Grant, because of the volatility we had with the rumors from the Saudi investment. So again, if you are looking to short, I'm looking to retest $10 or $9 because that was the breakout. Let's see if we retrace that. Maybe it'll be an opportunity to catch some bags. But again, lower your expectations. Go very light on Lucid. Maybe they let us trade it because the volatility gets halted and all that good stuff. So we just got to be careful on that name. So much coming on this week, guys. Wednesday, the FOMC is at 2 p.m. At 2:30 is the actual press conference. If you are interested in reading the newsletter, make sure to take a look at that. We posted that for the people who signed up for the newsletter on the website, GAR.capital. I talked about the actual scenarios when it comes to the Fed. And again, I've been saying now since December that we were going to get a 25 and pause. I'm going to lower that expectation here to around maybe a 40 to 35% chance that happens. I think we're just going to get a 25 and just raise again in March. And the reason I say that is because the stock market has gone so high so quickly. And that's the problem. I think the Fed is watching that. They don't want inflation to get away from them. They don't want people to get too excited. So again, a check back this week, maybe a red week, maybe we get to 4,000, maybe we get to 3,950 is the expectation. The real key is, do we hold 3,900 for the rest of the week? Or do we continue higher, finally get that golden cross of the 50 above the 200, and then we can start making our new assessments. But as of right now, from what I'm seeing, I would expect a little bit of a pullback and volatility with the earnings and the FOMC coming. So lower those expectations that we're going to soar into 4,200 by next week. More than likely, that's not going to happen. We'll probably chop around a bit and get a little lower. So that's my expectation, at least for this week. And then the week after, usually after an FOMC meeting, is rather bullish. So we can talk about that week when we get there. We'll go ahead and leave it there, guys. Have a great rest of your morning. We don't have any risk up right now in terms of signals. So, clean sheet. We'll see what we get from here moving forward. And again, it's very, very important if you're trading this week to be very prudent. You probably had a great week last week, great week the week before, and the whole month. Let's not just give it away on the first trade that you see. Take it easy. Patience is key. Remember, we're just getting into February now. Still got 11 more months to go. Have a great rest of your morning, guys. I will see you tomorrow for the morning note at 9 a.m. Eastern Standard Time. Thank you again for watching. Make sure to hit that like button and subscribe to this channel if you love this, and share it with anybody who you think would enjoy these videos. We'll see you guys later.